Since we're in the new year, some of you guys might be starting to look into cryptocurrencies as a form of investment, but probably have no idea where to start and how to even start. So should you buy one crypto or should you create your own crypto index fund? Hi, my name is Jordan and welcome to the channel where we talk about personal finance and how to grow your passive income. So when it comes to investing, everyone is very different because of the different circumstances that each of us have, and it might be very tricky if we are investing based on another person's circumstances. We might end up getting burned and that is not what we want. But today, we'll explore a couple of portfolios that you can give some thought on and tweak it to your own situation or circumstance. The purpose of the portfolio is to give us an exposure to different cryptocurrencies without taking too much risk if you are risk averse, but at the same time to give you the highest gain possible if you are the one that eats risk for breakfast. To help gain some clarity on which portfolio suits you, I have created 3 main characters that we can probably relate to. So these characters are for the purpose of this video, and if you find it similar to you, highly likely it's a coincidence. And the 3 characters are the hodler, the investor, and the explorer. So let's talk about the hodler.
Hodl, 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 hodl.
The hodler is someone who engages the buy and hold strategy, and like the name suggests, this person might probably use 1 to 2 exchanges at most where they can buy and hold their cryptocurrencies and not be too worried about market price changes in the short term because they are looking at a timeline of over 5 to 10 years. So as a hodler, you won't be doing many trades across a whole year, and most of your trades are usually buying or to accumulate even more cryptocurrencies. So something that might work for such a person will be like a balanced portfolio. So a balanced portfolio is similar to the portfolio that we have created for our YouTube channel, and you can watch that video right after this one, and I'll leave it in the card above as well as in the description. So the YouTube portfolio tracks the top 10 cryptocurrencies based on the market cap, and we regularly dollar cost average into this portfolio to grow it and to accumulate these cryptocurrencies as well. So what happens here is when the market goes down, we'll be able to purchase more of these cryptocurrencies, and when the market goes up, we purchase less of these cryptocurrencies. But over a period of time, the amount that we paid for our crypto will average out and it should work in our favor, giving us some good gains. So if you are a hodler, this might be a portfolio to consider. And to increase your gains, you might want to consider using some high-yield savings accounts, which gives you additional cryptocurrencies. So like our YouTube portfolio, we are using crypto.com. They may not be the best with the fees, but for a beginner, it's pretty easy to use. And there is an earn function that gives us 1 to 8% just for depositing our cryptocurrencies. And this is paid out weekly, and let's be real, who doesn't love free crypto? So the next portfolio is for the investor. The investor is someone who probably has investments in traditional assets like stocks, bonds, real estate, which are bringing them 5 to 7% yields in coupons, dividend, or rental income. So what the investor needs is to leverage on new technologies or new investment assets to increase the yield that they are currently getting. And chances are the investor will probably have 5 to 10% of their net worth in cryptocurrencies because they are still learning the technology and the investment strategy in the cryptocurrency space. So the portfolio that might be suitable for the investor is probably something called the market-weighted portfolio. This portfolio isn't as straightforward as a balanced portfolio because it requires some calculations. To create a market-weighted portfolio, you first need to identify the tokens that you're interested in. It can be meme tokens, blue chip crypto, or even protocol cryptos. So for this example, we'll take the top 5 cryptocurrencies based on market cap. So let's say the investor is interested in investing in Bitcoin, Ethereum, BNB, Solana, and ADA. What you need to do next is to take the total market cap of these tokens and add them up. So at the point of recording, Bitcoin has a market cap of 804 billion, Ethereum has a market cap of 443 billion, BNB has a market cap of 86 billion, Solana has a market cap of 53 billion, and Cardano has a market cap of 43 billion. So in total, we roughly have 1.5 trillion in total market cap. Next, what we do is to use the market cap of each token divided by the total market cap, which is 1.5 trillion, and the answer will give us a percentage, which roughly gives us 58% in Bitcoin, 29% in Ethereum, 6% in BNB, 3.5% in Solana, and roughly 3.5% in Cardano. So based on these percentages, we'll allocate our funds into these 5 cryptocurrencies. So if we have a fund size of 10,000, this means that we'll put 5,800 into Bitcoin, 2,900 into Ethereum, 600 into BNB, and $350 into Solana and ADA. This portfolio will give the investor exposure to the different tokens that they are looking to invest in based on market capitalization, which is how most ETFs are built upon. Thus, this will be much more familiar to the investors. So these percentages will change depending on the tokens that you are investing into and what your goals are for investing into these tokens. So one other thing that you can do is to also rebalance this portfolio on a monthly basis to keep the percentages the same, or just let the market do its work and let the tokens grow. Lastly, we have the explorers. So the explorers are a bunch of people who can take high risks for high returns.
It's high risk, but it's also high reward.
They are willing to experiment with different DeFi apps, platforms, and much more. So essentially, they are a group of individuals that will look out for low cap tokens with the objective of flipping them for a fast profit. And with different industries within the crypto space gaining attraction and adoption, picking winners might prove to be a pretty big challenge.
Challenge accepted.
So for example, in 2021, protocol tokens like Luna and Solana saw astronomical growth of 12,866% and 10,289% respectively. Had the Explorer purchased them early on, this would make them a very big profit. Hence, the Explorer would need a portfolio that's fast in growth, but this requires time for research and to be on top of the latest news that is happening in the crypto space. So personally, I don't have a suggested portfolio for the Explorer because of the myriads of tokens that are available out there. But chances are, if you're in multiple chat groups or multiple discords, you'll be hearing a lot of these tokens being shielded and potentially might be able to pick up some good gems. But do keep in mind that everyone is different and you might find yourself with a mix of each character that was shared in this video. So you could be a 40% investor mode, 30% hodler, and 30% explorer. But at the end of the day, you know yourself best, and it's probably easier if you lay out your personal goals and see how you can use this information in this video to help you plan out your own portfolio. If you're looking to start a portfolio of cryptocurrencies, I have left links of my favorite exchanges, but if you have friends who are using them, do get their referral code from them, and all I ask from you is to drop a like and subscribe to this video. It is free, but it does help the channel a lot. And with that, I'll see you in the next video.